Hi guys, Gil here with GoADU. Have you ever wondered if building an ADU is better investment than putting your money in the stock market, buying gold, or even purchasing a separate income property? Today, we're doing a head-to-head comparison to show you why building an ADU in LA is a better investment than those other options. First, let's talk about the stock market. Historically, the S&P 500 has an average annual return of about 7 to 10% after adjusting for inflation. Now let's compare that to an ADU in Los Angeles. Imagine you built a 600 square foot ADU for $200,000 and rent it out for $2,400 a month, a common rate in LA for a one-bedroom unit. Here's the math. Annual rental income, $28,800. Subtract expenses like property taxes, maintenance, and insurance. Let's estimate about $6,000 a year. That leaves $22,800 in net income, or an 11.4 annual return on your $200,000 investment. Unlike the stock market, which can be volatile, rental income is steady and predictable. Plus, your ADU and the land it's on will appreciate over time. Over 10 years, your ADU could generate over $228,000 in rental income. Plus, the appreciation on your property easily outpacing stock market returns. What about investing in gold or other precious metals? These are often seen as safe havens during economic uncertainty, but here's the problem. Gold's average return over the last 20 years is just 6% annually, and unlike an ADU, gold doesn't generate any income, it just sits there. Meanwhile, an ADU provides steady, predictable cash flow every month. In fact, rental income often goes up during recessions, making ADUs a safer and more practical investment. How about buying another income property instead of building an ADU? On the surface, this might seem like a good idea, but let's dig into the numbers. Buying a duplex in LA costs $1.2 million on average, and you'd need a 20% down payment. That's $240,000 in cash. Then there are closing costs, property management fees, and higher property taxes. Plus, you're competing in a hot market, often paying above asking price just to secure the deal. Now compare that to building an ADU in your own backyard. You can leverage your home equity to fund the project, meaning you're not putting up large amounts of cash up front. Instead of buying an entirely new property, you're investing in the one you already own, keeping costs lower and returns higher. But here's the kicker. ADUs have a higher return of investment because they cost less to build than what a new property costs to buy. And they don't come with the added headaches of managing tenants across multiple locations. What about dividend-paying stocks or REITs, real estate investment trusts? Dividend-paying stocks. These are stocks that pay out a portion of their earnings to shareholders, typically providing an annual yield of 2 to 4%. For example, if you invest $200,000 in dividend stocks with a 3% yield, you'd earn $6,000 per year. While this provides some passive income, it's far less than the $22,800 net income you could generate annually from an ADU in Los Angeles. REITs, real estate investment trusts, pull money from investors to buy and manage income-generating properties. REITs typically yield 4 to 7% annually. If you invested $200,000 in a REIT with a 5% yield, you'd earn $10,000 per year. Again, this is lower than the potential cash flow from an ADU, and you wouldn't benefit from direct property ownership or equity building. Here's what it all boils down to. ADUs provide passive income. Renters pay you every month while your property appreciates. Less volatility. Unlike stocks or real estate markets, your ADU is a stable physical asset. No large cash outlay. With an ADU, you're leveraging your equity, not your savings. Over 20 years, a single ADU could generate over $480,000 in rental income, with your property value increasing by 20 to 30%. That's a combination of cash flow and equity that other investments just can't match. Ready to find out more? Click the link below to set up a free consultation and find out if an ADU is the right move for your future. And hit subscribe to check out all our other videos for all the tips you'll need to get started.